All right, let's get this thing started. Welcome to the Closing Beat. Happy Tuesday, everybody. How you doing out there? Hope all is going well for you. You're having a good day. Yeah, we're going to talk about the stock market. Getting exciting out there if you're paying attention to the stock market. We'll go over all of it, and I'll teach you some things and help you kind of sort through watch lists and things. We have a couple different segments of the show if you're joining us for the first time, so I hope you enjoy. We're also financial advisors at Jazz Wealth. We like to teach. So every day we try to highlight that, do a little marketing, teach you something here so that you get to know how we do things. Also, this Thursday, which is normally the day that we do classes for customers, Thursday nights, we do a live class privately just for them. I think I'm going to hit the button and just let everybody come into that to give you a little taste of jazz and see how we do things here. So just a heads up, if you're interested, we'll be doing that probably live Thursday at 8 o'clock Eastern time. Anyways, let's talk about the stock market today. You got another down day. Those tech stocks are starting to weigh overall on the overall stock market. Yesterday, we went through the sector rotation and talked about how all that works and with what we were seeing. And today, you can see that those tech stocks still selling off, even through the late afternoon there, really started to weigh overall. So if we go over to the charts, here's the S&P finally pulling back a little bit after a string of up days there. Not horrible. I mean, yeah, the pullback is fine. I don't think anybody's going to argue with that. But maybe the first sign of a start to a pullback there coming on the day that we get a new potential VP announcement, right? So we'll stay away from the politics for today. But we don't know that was part of the reason, but the markets did start to accelerate as that was coming out and becoming more confirmed, of course, confirmed after hours. Anyways, we take a look at the Dow. You've got the Dow on the day, was up early in the day. It was actually quite strong to start the day, thanks to names like Boeing. Boeing's continuing, its recovery overall, was up 12% over the last 5 days. That started to fade away. You also had financials. Financials, a rare outperformer today. We haven't seen that in a while. You got names like JP Morgan and Goldman Sachs helping out. The financials in the Dow kind of lead the way, but all that started to fade away. Actually, at the highs of the day today, here's an interesting stat for you. The Dow was up 1,700 points just this month, right? So just this month already, and there's not 11 calendar days, right? There's just trading days. If you were to divide that by the number of days that the markets were open, that would be an average of 242 points per day for the Dow. So another reason to kind of highlight, a little too far, too fast sort of thing going on there. The afternoon sell-off was largely due in the Dow due to Apple starting to pull back there, which I think a lot of people are welcoming, and that's okay as well. Microsoft also pulling back almost to the 50-day moving average. Those two stocks wiped out all the gains in the rest of the Dow and put us basically down just a little bit on the day. We'll go over to the Nasdaq. The Nasdaq's been on this tear. I gave you the stats, 33 days of hitting new 52-week highs since breaking out from the virus highs there overall. It just kind of an interesting index right now. Tech-led, biotech-led. You got the best of both worlds with the tech stocks doing well and a lot of the whole potential vaccine thing going on there. So a lot of biotechs doing well. Also, average gain for the first day of the week, by the way, was been about 1.4%. Here's a quick chart to show you. That's the research site. Let's go over here. Here's all the gains on the first day of the week since we hit a virus low. You can see everything from 7% all the way down to a slight loss of 2.1%. The majority, in fact, 15 of those 19 days, were positive. So the first day of the week, you know how we do that every now and then, Tuesday performance, wacky Wednesday, turnaround Tuesday or Thursday, all that stuff. Here's the Nasdaq on the first day of the week, whether it was a Monday or Tuesday. There's a couple Tuesdays in there. Also higher by 1% or more, 70% of the time on the first day of the week. So the Nasdaq's been gaining most of its gains on the first day of the week. And in fact, if you add up all of these gains, take away the 4 losses there, that is half of the gains for the Nasdaq overall, that since we hit that virus low, March 23rd, half of the gains in the Nasdaq came in the first day of the week. So a lot of action there, and that is starting to fade away ever so slightly. You can see the Nasdaq starting to take a little bit of a break there. Not a problem. I don't think most people mind overall. Hey, there's no FinTips videos this week. We're taking a little bit of time off to readjust some things, but we've got some great videos on our YouTube site. FinTips is a short series that we do, 5, 6, 7-minute videos where we teach you something new, get out of the way, let you learn something there. And on our research site, I did tease you with that a second ago. Let me pop over to that real quick because I did post that. We've got a couple extra posts on this week that we're going to do. One of them is already posted. extended stocks in the Russell 1000, which is the largest 1,000 companies in the U.S. Went through and talked about this yesterday, gave you some of those. That post is now officially live. There's a lot of really cool things in here in terms of research, in terms of performance by day and all this great stuff. So if you can't be a customer of Jazz and you want to check it out, go ahead and dive in there. You can go to jazzwealth.com/research, which is on your page screen as well. And we're also going to be posting the most extended stocks by sector coming up. So just a lot of stuff there to help you drive ideas instead of just give you ideas. The whole teach a man to fish sort of thing. That's the method of our madness there for the research site. So I hope you'll check that out. It's $13 a month. There's my pitch for that. Small cap value continues to be the exciting area, by the way. Small cap value now up 10% in the last month. If you're looking at your 401k and you've got a nice diverse mix of funds in there, you look at your value funds, small and mid cap value, just doing really well, really killing it there. I'll go over to, let's just do like the Russell 2000 to kind of highlight small caps. You got a great gain here. We've walked you through every single little bit of the breakout there. Large cap, by the way, is now down 1% over the last month. Money moving out of large cap, looking for better deals, taking risk, by the way, in the small cap value areas there. So if you have a 401k and you're noticing a little bit of disconnect in your performance right now, totally okay, totally acceptable, and now you know why, right? Just give you a little bit of a lesson there. All right, going over to our sector breakdown here. We've got a lot to cover today, so let's dive through it. Financials, right? That was your leader today. Financials haven't led in a while in terms of being the sector that had the best performance. Up 6% in the last 5 days. They gave back some of that there towards the last bit of the day. Money continues to go into these different areas, leaving tech. That's the big news. You see it. You see the FANG stocks pulling back. You see other sectors doing well. You've got to be in tune with that sector rotation if you're being active with your investments, if you are. Energy getting better and better here. It did fade towards the end of the day. It was down by the end of the day there, but oil keeps teasing at a little bit of a breakout there. So we mentioned the technical pattern here, breakdown reversal. If I could just zoom in a little bit. Here's that breakdown reversal that tends to lead to higher prices. We've got oil inventories coming out tomorrow. We've got the chance to be over the 200-day moving average. All the great news around the economy and the demand and everything. Airplanes out there flying. Could be a recipe for the oil futures or oil just per barrel in general to do quite well there. You can see it's technically right at a technical resistance. Anything above that would also fill this gap in completely, which would satisfy the technical traders there as well. And so that's what you have is the price of oil and why you saw energy doing well today. Moving over to industrials, that was one of the other leaders on the day, grabbing more and more dough from the tech investors, right? People are coming back to these names like Boeing saying, all right, I'll get back in there. That one actually led the industrials today, even though it did pull back. Union Pacific up to new highs there. We've been talking about the rails there. That was also a leader. 3M, these are stocks that don't get a lot of attention. They're not as exciting. They seeing a lot of strength today. Lockheed Martin looking well also. So you've got these, you got to pick up on these little things like this little bit of waking up. I don't know that it means they're all going to head higher, but that's what you're seeing here in the short term. If you look at the industrials, we talked about this, gave you a whole list of stocks and everything before this started breaking out to give you an idea of what to find, how to look for them, and how to come up with ideas. So looking good. Tech stocks, you might imagine, pulling back today. Everyone, really every name is trying to pull back in this sector. You're seeing a lot of rotation going on there. We did Apple and Microsoft already. Looking at things like AMD, way too far, too fast. We've covered that in great detail. Starting to pull back. However, a couple little bright spots. You got Visa. They pulled back late in the day, but still relatively strong compared to the sector, trying to break out, trying to give you that breakout that we see the line on the charts there we've been hinting at. Also want to talk about Broadcom getting up to these new highs as well. They won some kind of appeal. Oh, the antitrust appeal. The FTC overruled their appeal in their favor, of course. So Broadcom strong on the day, just pulled back at the end of the day with just broad market sort of weakness there. But a real strong stock, strong for the sector overall, and of course holding up relatively strong compared to what you're seeing in the XLK with that pullback there. So maybe that's one to keep on a watch list. I don't know, something to just bring to your attention. All right, let's do it. Gold. Woo! One day after we covered gold being too far, too fast, going over all those stats. Yesterday, check out our Closing Beat show. We went over this in great detail to say that gold is not bad at those higher prices. It's just overextended, and you don't want to be the one caught paying those higher prices. Those were the exact words. Well, today, the price of gold actually falling a total of $93, closing at $19.46. That's almost 5% lower on the day. If you look at something like the GLD, that's going to have a gap in there. That's because this is not traded all hours of the day. Futures are traded overnight. So GLD gapping down, gaps down over 3%. That's happened less than 15 times in the entire history of this ETF. Just so you know, that is extremely rare that this GLD would gap down by that much. In almost every case, all those 15 times that this has happened, 1 week later, it was lower. So just something to kind of point out. If you want to see more data on that, yesterday's closing beat would do the trick to give you all the data and things like that. Naturally, with gold falling on the day, you got GDX, this gold miners. They pulled back as well. Names like Newmont, Anglo Ashanti Gold, GOLD, they all pulled back on the day, and you can understand why. I mean, it's just what happened there. And that's basically what happened around the world in the sectors there. Also, I want to point out volatility. VXX I'll use to highlight this. You could use the futures as well if you want, but I'll use the ETF since that's available to everybody. Great reversal there, right? Extra volume. You have people placing a couple of hedges there. All of a sudden, gold is not a hedge in the short term. You got people using volatility, so not really sector rotation, but hedge rotation, I guess is an interesting way to say it there. All right, let's go over to some new highs, new lows for the day. You got a total of, well, actually you had 45 new highs on the day. 30 of them closed off of their highs, meaning they did hit new 52-week highs, but they didn't stay up there. They pulled back off of the day there. I'll point out a few. Broadcom's already one on a list I wanted to note, even though it did pull back, looking pretty good there. Something to look at. Texas Instruments in the semiconductor space, relatively strong compared to the sector. A little extended here in the short term, but maybe one for a watch list, something you want to look at. UNH was in the news today. Recent breakout, but also getting some profit taking there. Maybe, something you want to check out. Price targets increased there. Mizzou, I think, was the one. They went to 361 from 315. They were currently at 315, is where the stock price is at right now. They went up to 361 over the next 12 months is where they think this thing is headed. So bring that to your attention. Sherwin-Williams, what would be cool here, this is just notable because it's starting to trade sideways. It's not pulling back, right? When you've got stocks that start to pull back and you see some that do not, well, some of them are going to pull back along the way, but the ones that hold, those are indicating to you that there's extra strength there. Whoever owns the stock is just not willing to sell it for whatever reason. And for right now, Sherwin-Williams is that. That could change tomorrow. It could change over the next couple of days, but it's what you call it like a watch list stock, right? Something you just kind of check in on over the next couple of days. And CarMax looking good. Relatively strong compared to the market. New highs today and kind of held up near those highs, pulled back a little bit, but it didn't go negative. So one of those breakout ideas that we highlighted, I'm just going to get rid of this line. We pointed this out in one of the shows. I'm going to start saving every piece of data from every show so we could actually tell you what day to go back and everything. But anyways, you've got CarMax looking good, probably the best out of all of them in terms of performance for the day. All right, let's go over to the watch list here. I've got something to teach you if you're interested in this today. It's going to be hang on, this is going to be kind of a good one. Grab a pen, and we'll go through this. Russell 2000, we've been talking about the Russell 2000 being strong and waking up. So the problem is when you go look at the Russell 2000 for stocks, there's a lot of them. So you have to apply more and more filters to maybe a scanner if you're using one or your own personal criteria so that you have a small list. We don't want to search through 900 stocks that fit the criteria of performing as well or better as the Russell 2000. So here's how we did this today. You got a list of stocks on your screen now. We looked at the Russell 2000 and we said, here's what we want. We want to recognize how the Russell's doing. Russell 2000 is up just about 10% here over the last month. All right, cool. We want to find stocks that are also up as much or more. But like we always do, we don't want stocks that are up 50%. That means we missed it, right? It's probably extended, something we don't want to participate in. So we said just this is totally subjective, right? I don't have any special sauce to this. We said, show us everything that is up 10 to 20%. So we could then say this is either performing in line with the index or it's outperforming by a little bit. Not a lot. Maybe we could get a big gainer out of it. So that's the first thing. The second thing is we said, must be a profitable company. And really, that's just a reason to kind of filter the list. You don't have to trade profitable stocks. You might want to invest in profitable stocks, but we said, okay, it's got to be a profitable company. I'm going to show you that here in just a second. We said the average 30-day volume has got to be over 100,000 shares. In the Russell 2000, there's a lot of stocks that barely trade, so much so that they're not even included in index ETFs and things like that. So we just had a minimum criteria for volume so we don't get tripped up on anything that doesn't trade a lot. We said the net profit margin for the company's got to be greater than 5%. So as I rattle this stuff off, all those stocks off to the right meet this criteria. Net profit margin greater than 5%. Only reason we did that was to limit the size, because when we put in the first bit of criteria, we had over 200 stocks meet that criteria. Don't want to look through all those. So net profit margin greater than 5%. Then we said quarterly revenue for the company's got to be in the top 10% of all the stocks that we have left on our list. That was just further a way to simplify our list and really hone in on some fundamental data that you otherwise maybe not consider if you're looking at the S&P, but for the Russell, it's important to use it to hone in on your list. And then we said, okay, let's take that list and let's sort it by those with the highest earnings per share. So we're looking at stocks that are performing well, both technically and fundamentally. That gets you down to a handful of stocks after explaining all of that. It's a lot of work, but here we go. You got big lots on the list, naturally performing well. If it pulls back a little with the Russell, that may be one that you recognize as a watch list item there for you. Also, we wanted a couple different sectors on the list as well. And what I'm going to do is, you can see the list there. Stiefel is the next one there. What I'm going to do is just pull up the whole list. There you go. So we'll look at it this way for you, just so you can see the list, because there was 13 names. I can only share 7 with you on the right. So you've got a couple different sectors here, so you're being a little bit diverse in terms of your opportunity. If you said, I cannot buy 2 stocks in one sector, I like to be more diverse, you've got more opportunity here. You can see we sorted by earnings per share. Big Lots is the best performer out of all of them, given the criteria that we looked for. 1-month returns are slightly better than the Russell 2000 as of yesterday. We also put in here how far extended it is. Like I just showed you a second ago, Big Lots may be a good one fundamentally, but technically it's a little bit extended. It is 11% overextended. In general, the lower the number, the better is going to be there. For selective insurance, right, that's going to be the one that's the least extended. So we'll go over and take a look at it real quick. There you go. You see what you can compare the difference, right? So fits all the criteria. However, it's not extended from any moving average. It's very close. Whereas if you look at something like Big Lots, there's a big gap between there. So that's what we're trying to highlight when we look at the extended area there, just so you know. Average 30-day volume, just want a little checklist. Over 100,000? Yep, that fits. Profit margins there had to be over 5%. Yep, that all fits there. Stiefel's actually the most profitable out of the group there. You got CNO, I believe, they were almost the most profitable. Yeah, CNO in the banking sector there, looking good. And then we said revenue per quarter, just the biggest. That's just a checklist, really, just so we could see, was the revenue, is it sorted, right? So that's all we did there. It has to be in the top 10%. Here is those 13 names for you to take a look at. 7 of them are off to your right. That is our scan for the day. I always feel like I just kind of rattle through this and somehow, like, all this work, we just go right through it. I don't know. KBH on the list there as well. You can kind of see fits the criteria. It's performing well. When you look at it compared to the Russell 2000, not bonds, Russell 2000, it's one, now you measure it. You say, okay, if the Russell pulls back and my KBH doesn't pull back, well, it's already fundamentally a decent stock, right? It's not too extended. It's obviously profitable. Volume is there, all that great stuff. Now you can look at this list and watch the Russell 2000 and say, okay, which ones didn't pull back, right? Which ones just fell apart? One of these is going to fall apart, right? It's just going to fall much further than the Russell. You're not going to be interested. Which ones held up the best? And then while you're waiting, you can actually look up some of these names and you go, all right, I've never heard of some of these stocks. Maybe you just have never traded them. You can do a little research and see if there's anything that maybe you don't believe in. Maybe you're environmentally conscious, socially conscious or something. You can make those decisions there. Anyways, that is the watch list for today in more of a is more of a geeky one. If you're watching this for the first time, usually the watch list is not so geeky, but when something sticks out like the Russell 2000, well, we want to go talk about it. We don't want to talk about it when the media picks up on it. We want to focus on it ahead of time, like our industrials from the other day. All right, stocks in the news. Let's go on over to that. We'll show you a couple here. Got 5 on the list for you today. Simon Property Group, again, higher on the day. Yesterday they were talking with Amazon, or the report came out. They were talking with Amazon for using JCPenney and Sears buildings for potential distribution centers. Today, they came out with earnings. Well, the interesting thing I found out of this was 73% of their rents have been collected on time. 91% of their tenants are open for business. So looking good for them. A lot of volume there. A lot of people assuming that the worst has already been priced in. So you see that stock a little bit higher. Casper, these guys are the ones that ship you the bed in the tiny little box. So you open it, it goes poof, and there's a big bed in the box there. Earnings beat, revenue beat. They are having some supply chain issues. They're looking for new suppliers overall. That was the only reason, the only negative you could find for Casper, in my opinion. The earnings were good. Everything else looked good. Shutterstock, too far, too fast, man. So the stock obviously had a great run over the last couple weeks, pulled back hard today, down 15%. Why? They're offering more shares. They're going to sell more shares because they can. I didn't see how many shares they were going to sell. They haven't actually announced the size yet. Nope, I don't see a size there. I might just be looking at the wrong thing, but they're going to sell more shares, right? They're diluting the ownership of the stock there, or owners of the stock, so it was lower on the day. In addition, it had already gained so much, people said, all right, fine, I'll take my profit, go trade something else. I'm not going to let you dilute me. So that's kind of what happened there. Novavax, very popular one here lately, down 16% on the day. Lost less than expected, so they had earnings come out. They do lose money. It's not a profitable company, but they lost less than expected, got a handful of agreements for the production of their COVID-19 vaccine that they're working on. I read a thing that it wasn't an exclusive agreement, though, and maybe that was the reason it sold off. Look, I think the bottom line is it's a $150 stock. Market cap is ridiculous. They don't make any money. So it's a consideration there. Everybody's betting on the vaccine, them being the leader. And then Apple. There was a report that iPhone sales in China were a little bit lower. It was just a report. Apple didn't confirm it. They won't confirm it or deny it. So just a report. You had a lot of people saying, okay, well, if that report is even kind of true, then maybe I should take some profit. So that stock started to pull back there. And those are stocks in the news overall. A couple others, and then we'll take your questions and maybe try. Tesla 5-for-1 stock split, breaking news. Oh, Tesla 5-for-1 stock split. Oh, thanks for the breaking news. We need a breaking news thing down there. Huh? Come on, it's election season. You never know. 5-for-1 stock split for Tesla there, announcing after hours, I guess, in real time there. The stock, I believe, is higher on the news. Much higher, pushing 7% there. Let's see. They approved a 5-for-1 split, trading at $13.75, well, at the close there. 5-for-1 stock split overall. It's going to be right after Apple. So that'll start on August 31st. Apple, I believe, was August 28th overall there. Wow. Okay. All you that have been looking for that, you know what they're doing there, just like Apple. Apple, I think, was asked by the Dow politely to split their stock. Tesla may be playing the S&P game. They don't want to be seen as that guy there. 5-for-1 stock split. So what that means is just like Apple, however many shares you have, on August 28th, they'll do the transaction. August 31st, it will start trading at that new price. It will be 5 times less expensive, but you will have 5 times as many shares. Doesn't affect the notional value or anything at all. Beautiful breaking news there. Love it. Staying on everything here. Earnings tomorrow. You got Cisco, you got YY, Chinese company, and you got Lyft coming out. You got 3 Fed members speaking tomorrow, so it could be a little bit of fireworks there. And you got the crude oil inventories that we already announced. ExxonMobil is 87 cents, Xilinx 38 cents, and Zion Bank 34 cents in terms of dividends being paid out. Let's try something here, see if we can take some comments. We've got a new little potential... That part's not working. Okay. Well, you got the breaking news, right? So you nailed that. We'll come back and we'll try the comment thing another day. But luckily, I have a backup plan. All right. Let's see if you have any questions. I'm happy to help you there. Yeah, I talked about Biden announcing Kamala Harris as the VP there. Yeah, I mean, other than that, I don't really focus on politics here unless they start messing with your dough. I have things I like about Mr. Joe Biden there, or Vice President Joe Biden, in terms of what they want to do with your money. I don't agree with. Also with Trump, you know, it's the same thing. You start messing with, our money there. That's when I get political. But everything else is up to you guys to decide there. I saw Russia says they have a vaccine. Why does nobody trust when another country says something? China says something and we're like, lying. Russia says something, we're, sure, whatever. But yeah, supposedly Russia has a successful COVID-19 vaccine, and we'll see. Yeah, see what happens there. Yep. Oh, you know what you forgot to do? Maybe change the link to that because we changed the stream link. The same stats would apply. A stock splitting does not affect performance in any way. It's literally just a price change. It's a documentation in a journal. It's a journal entry. That's basically all it is. Whatever's gonna happen or has happened with Tesla is just gonna happen. That's the period. You want to start a rather large position on Simon Group there based on it being possibly undervalued in the hopes of Amazon deal. I mean, if you believe in that, I don't know that that'll happen, but if you believe in that or you believe the worst is already priced in, that is essentially investing, right? You see a stock that is priced at a value you think is fair or underpriced. I can't blame you for looking at a stock like that and saying, I feel like the worst is over. We're probably not going to re-shut down again. Not my opinion. I'm just saying if you believe that and you want to take a shot, yeah, I mean, can't blame you there. Yep. Downtrend started for just one day. No, downtrends don't start in just one day. And in fact, downtrends have not even come close to started on the Nasdaq. You'd have to break prior lows. From a technical perspective, you'd have to break prior lows in order to start an official downtrend. No index is anywhere near starting a downtrend. And there was a lot of questions, so I just missed all that. Oh boy, I mentioned the China thing. We're done. I love it. You want to get into Apple before the split. Doesn't matter whether you get in before or after. Seriously, really does not matter at all. I think Apple starting to pull back here is good. Way too early to get super excited about starting any serious position, especially with tech showing its weakness here in the short term. I think let it relax. There's no way it's going to be anytime this week or probably next week where it'd be a good time to get serious about Apple, if you don't already have it, right? So there you go. Russia's vaccine is just vodka. Hey man, whatever works, right? Yep, I love it there. You bought HSGC, it's just G, HSGC. So you bought, or HCSG. You bought that one today, huh? And so the idea there, you got a 16% drop, looking like an analyst downgrade. Well, okay. I don't know a whole lot about the stock in terms of fundamentals or anything like that, but you've got a stock now that had a bad day. I never like to buy a stock on the first bad day, so that would be the first thing I would say is no need to buy the stock right now. Let's see what happens. But you also bought a stock back into an area where nothing was really happening. Granted, I mean, it's pretty volatile, but you're buying into an area where people are having a hard time making a decision if it's a good deal or not a good deal. And you can tell that even further by the amount of volume that came in today, and it basically closed at the lows of the day. That means there was nobody else but you and maybe some other people that decided that was good enough and they wanted to buy it. So you may have a little bit of patience on that stock there with this day being so nasty there, but that's a tough one. Thanks for teaching us. Well, thanks for watching. I appreciate it there. Yeah. Oh, Harry's pumped, man. I know Harry likes him some Tesla. Tesla technically going to be cheaper soon. I love it. So still 3,000 then, Harry? But we're going from 400 to 3,000? I love it. All right, I'll wrap it up there. I do appreciate you guys hanging out here with us today. Yeah, we'll be back tomorrow. Do this all over again. Hopefully teach you something new. Enjoy the rest of your day, and thanks for watching. Hit the thumbs up, subscribe button, all that great stuff. I appreciate that. And yeah, we'll see you later.